This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. Well, in case you're wondering why just two of us, well, there are not just two of us. Adil, hi, good morning.
Yeah, morning. Don't be worried.
There are three of us. And let me introduce Sonia, who's joining us from the Garden City? The beautiful Bangalore. Sonia, hi, good morning.
Hi, Prashant, Nigel, good morning. Absolutely.
Morning.
I'm in Bangalore for a couple of days this week, so Nigel, morning to you as well. I mean, as you know, right, the weather is great in Bangalore, the food is amazing, so lots to look forward to. But back to you guys in the studio.
Absolutely. Is the weather ain't bad here in Mumbai as well, right? I mean,
Yeah.
Last, a little hot. Well, Bangalore is always, I mean, the weather is the USP in that sense. But how's the weather for markets looking, right? That's essentially what we kind of kick off the show as always with. Let's just quickly tell you what you need to know as we begin a new trading week. Now, I just want to start with the broad sort of, a top-down talking point, really. It's a talking point, and it's a lot about perception, but this is important. You basically have this as a bit of a problem for the markets. The problem is that the U.S. Growth in U.S. is proving to be resilient despite over 500 basis points of rate increases. That's the basic fundamental issue. Why is that an issue? That should be great news. Well, growth is great. They've hiked. The problem is many believe that inflation will continue to be a problem. It won't come to the Fed's 2% level until growth starts to slow down. And growth, presumably at this stage, at this point in time, is not slow enough. It needs to slow, but not yet. Discussion around the neutral rate is starting to pick up as a result. What is the neutral rate? Neutral rate is basically a level at which the Fed gets to, and then it doesn't need to do more. It doesn't need to cut. It doesn't need to hike. It just leaves the rate there for a while. That's the neutral rate. Because of these, because so much has been done in terms of hikes, there was some understanding that the Fed does not need to do more. Lagged impact and all of that will start to play through. But so far, it's not showing up. And that's the reason why discussion around whether this neutral rate needs to actually go higher. That's the big global talking point. The 10-year Treasury yield, it came off about 3 or 4 basis points on Friday, is still near about the highest level since the fall of 2007. So we are talking about the risk-free rate, the 10-year US benchmark at the highest since 2007. Well, we'll get more clarity. The Jackson Hole event, the big event at Jackson Hole is this week, and we will hear from the Fed Chair Powell on Friday. Will we get acknowledgement of the need for higher neutral rate? I think that's going to be the big talking point. Last year in 2022, when the Jackson Hole Summit happened, the kind of takeaway was that the policymakers all said, we need to get to this neutral rate. I think this year, the discussion, or at least the expectation is that the discussion will be to find that neutral rate. Where is it? Are we already there, or we need to be higher? That's the basic global backdrop that we are working with. It's not a bad problem to have. It's not as if growth is cratering or anything of that sort in the U.S. It's actually, as I said on Friday, it's actually so good that it's starting to hurt at the margin, right? So that's the global setup. Now let's just get to the Indian context and what we're seeing, right? On Friday, we basically on the Nifty broke the low of 19,257, but managed to recover. So that's point number one. Support for the Nifty comes in at 19,230. So actually, put both those markers. One is 19,257. We managed to have a close of about 50 points above that. And then after that, if that were to go once again, the support comes in at about 19,230. It's an ending diagonal pattern. I mean, we'll try and show you graphically as well, chartically as well, how this looks. The resistance for the Nifty is at the falling trend line from the 9th of August high. That stands at 19,400. I mean, actually, it's not a resistance. The point is you cross that, and then slowly you need, these are markers, basically, that confidence will start to come back. That maybe this short-term pullback, the short-term correction, we are kind of putting that behind, and the market is starting to move on. So it's 19,400 is that level that I would like to put out this morning. It's about 100 points from where we are. Bank Nifty has not broken the 16th of August low, but we've not seen any signs of reversal higher, a reversal to the trend. The Nifty Bank did marginally break the 20-week moving average, which stands at 43,870. That's 10 missing, but 43,870. Support comes in at the recent lows of 43,600. And for the Nifty Bank, to say that the correction, the short-term pullback is behind us, we need to close above 44,100 or so. We're at about 43,850, which is not, again, very far away. Near-term markers, both on the downside and upside, which will give you an indication. I think the market's perhaps taking it easy, absolutely flat kind of open, according to the GIFT Nifty. The big cue, and this is a global correction, the big cue to resolve that global dilemma will come in towards the end of this week when we will hear from Fed Chair Powell at that Jackson Hole symposium. Sonia.
Absolutely. And, we were discussing this, Prashant, right, on our Editors Roundtable show as to how this market is just consolidating. There is a downward bias, of course, but it's been in such a tight range for the last many weeks. But give and take everything, if you look at it, it's been the third straight week of losses that the US markets have seen. And our markets have also come off quite a bit. From those all-time highs, the Nifty is down almost about 3.5% from the 20th July highs. But there's further damage that's happened in the broader markets as well. Just look at the Bank Nifty, right? The Bank Nifty is down 5% now from the highs that we've seen in July. And you were talking about the resistance levels that the Nifty is facing. So that recent 11th August high that we hit of 19,480, I think that's been a big marker on the upside that the market has just refused to get above. And looks like there are not too many triggers which could take it above that in the very near term. The flows have also been very muted. So on Friday too, right, you didn't see too much by way of flows. DIs bought a tad bit, about 400 crores. FIIs sold. So a couple of things that you need to watch out for today. Of course, we'll talk about them in greater detail. Titan, where the company has acquired the founder's remaining 27% stake in Carrot Lane. So in the longer term, of course, in the near term, that could be a bit of a headwind, but in the longer term, that's a big positive. Geo Financial listing happens today. You were speaking about that a while back, so that all eyes will be on that. There's a Reliance AGM that takes place on the 28th of this month as well. So, there will, of course, be more details that will come through on, on what happens with Geo Financials, etc. And then Jerome Powell's speech on Friday, which is keenly awaited, and any directional call from that. But give and take everything, Nigel, this has been a market that has just not gone anywhere. It's frustrated investors, traders a bit. The bias is on the downside, but there are some firm markers that we're seeing right now.
Well, I'll agree with you, Sonia. You'll be tilting more towards the downside than the upside as this juncture, but it's been so-called a scalper's market. What is that? You buy the intraday dip, but you square off the position and don't carry it over. And that trade has worked out perfectly in the entire last week. If you pull up the Nifty intraday chart as well on Friday itself, you bought the intraday dip, well, you would be making some money. But if you didn't square it up well towards the end of trade, we returned back towards the lower end of the range. So it's a bit of a scalper's market, so to call it. One point that played out in the favor of the bulls is the Nifty Bank. Now, it outperformed the Nifty in Friday's trading session. It has defended the 100 DMA, and the bulls will be hoping that the Nifty Bank can find its form, because that's been the underperforming index. If that can find its form, then in fact it can help the Nifty get some support and maybe try to move up as well. Now, on the Nifty as well as on the Nifty Bank, we had the open interest that came in lower. And at the end of the day, we got the FI data points. Well, they covered close on 10,000 short positions, though they continue to remain net short, but the net short positioning as a percentage of the total open interest on index futures is at around 58% or thereabouts. On the option side, well, you had 19,400 call, 19,300 call. Both of them were fairly active. But on the downside, you had the 19,250 put, which was active, premium at around 60 rupees, which will give the bulls some kind of hope. So what are the levels you're looking at? Well, even if the Nifty recovers, you'll see a fresh breakout will come only once we can cross that 20 DMA. So at around that 19,550, 19,600, that's a bit of a resistance area. On the downside, we're hovering around the 50 DMA. Though going by the options data, the crucial support will be around 19,200, 19,250. And the Nifty Bank, since I said, it came back a little bit in Friday's trading session. It found its form a little bit, just outperformed Nifty, though marginally. The 100 DMA is important. We have managed to defend that mark. Intraday, we have breached that level. So that becomes a reference point. And I say that's important, the 43,600, 43,500 odd mark, because otherwise we're looking at a sharper correction in case the Nifty wants to go ahead, Nifty Bank wants to go ahead and visit the 200 DMA. So I think scalpers market, stick to that trade, right, which has worked. Buy the intraday dip, maybe you could do that. And in fact, square off the position if you get that bounce from the lows. But a fresh breakout will be only once the Nifty gets past the 20 DMA.
Well, absolutely. So that's basically what you need to know as we kick off another day, another week. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. James Sullivan of JP Morgan will join in to discuss the global trade setup. Our research team will get you CNBC TV18's list of top 10 stocks for the day. And at 8:30 this morning, Prakash Diwan will join in with a quick check on markets, stocks and themes he'd like to bet on.
All right, plenty to talk about in the next 2.5 hours, but let's kickstart very quickly with some commentary coming in from one of the best and brightest minds, Jonathan Garner of Morgan Stanley, who says that earnings and sales are coming in broadly in line with estimates in Q2 thus far, but with relative strength in India and Singapore, where full-year estimates for 2023 and 2024 are also showing resilience. He says cautious guidance and US dollar strength is weighing on forecasts more broadly, particularly in China.
Okay, some money market views as well. This is B. Prasanna of ICICI Bank, who says the dollar is getting support from higher bond yields, while Asian currencies remain under pressure led by the weakening Chinese yuan. He says rupee traded with a weakening bias and closed at a fresh low, although RBI intervention protected it from a sharper depreciation. He expects a strong dollar trend to continue against emerging market currencies in the near term and expects the rupee to be in the range of between 82.8 to 83.5 in the next week, with RBI smoothing volatility.
All right, and on the bonds, B. Prasanna says the economic data in the U.S. continues to remain bond negative. He says local yields, meanwhile, retraced from previous highs on the back of strong investor demand. He expects range-bound movements in the near future in absence of any major trigger. He expects the 10-year benchmark bond yield to trade in a range of 7.1 to 7.25%.
All right, we got a lot of stock-specific action that we're going to be tracking for you. We get to that in just a bit in our special Top 10 segment. For the time being, though, we'll run you through the list. We're looking at PNB Housing Finance, Yes Bank, Route Mobile, Shoba, KEC International, Adani Ports, as well as the Murukupa Group stocks. They are stocks on the back of positive news flow. On the flip side, though, you have Titan, Gujarat Gas, and Tanla platforms that could be reacting to negative news flow over the weekend.